In studio, he's back. You been on vacation?
Yes, I have. Thank you for having me back, Captain.
Jason Chlup is here. One of the, I guess, what do you call yourself? You're an investment
advisor.
Advisor?
Yes.
Yeah, down there at LOM, Bermuda's offshore private wealth management and investment company on the island. Good to see you again.
Thanks for having me back. Good to be back.
Yeah, brought the storm with you, but it's okay.
Yes, my first storm on the island.
Is this your first hurricane?
Well, it depends how much of a hurricane
this
we
get.
This
is not too bad.
Yes, so I'm happy so far.
Yeah, we all are. We're grateful. Anyway, last time we had you here, we were talking about a number of things. Today, I'd like for us to touch on the bull market. I want to know what that is because you hear about this, the bull market and all that. There's terms that you guys use on Wall Street and in investing and all the rest. But I want to know what that is. And I also want to know what the average bull market, how long it lasts and all that. And you want to get in when it's a bull market, right?
Ideally, yes, you want to get in when it's a bull market. Ideally, or more ideally, you want to be in before the bull market. Mm-hmm. So bull market is, or the market changes when it's about a standard change of 20%. So if the market pulls back 20%, it's seen as a bear market. So when the markets are on the pullback, when it's on the growth side, so when it grows about 20%, then it's set to be a bull market. So that's just the terms that they use. So around the June month, we increased about 20% in the market on the general markets, and that's why it's sort of seen as a bull market. Although at the moment we're kind of saying, we may not be out the woods. We've seen we've seen a bit of pullback this month.
There's a lot of factors, like inflation and all the other stuff. That
yes,
factors.
I mean, I'd like to talk about that a little bit later.
Okay, but I'm just saying,
yes, definitely
considerations.
So there's lots of things that are affecting the market, and there seems to be a bit of people are a bit tentative at the moment. Just not sure where exactly everything's going. So although we technically in a bull market, there is some tentative with investing, but that's just people being conservative because of last year.
How long do bull markets usually?
So the average bull market lasts about 2.7 years and gains about 112%. That's just the average. Not to say that it will happen. It could be better. It could be slightly worse, but that's
when I hear anything 100% and over, it sounds good to me. Is that good?
Well, it's very good.
I'm saying 112% sounds decent to me.
Well, yes, in 2.7 years, if you take the average, it is, but you've also got to be in at the right time. Remember, again, I think we spoke about it previously, it's all about time in the market and not trying to time the market. Mm. So that's what, that's the difficult part about it.
Which brings me to this point. People are scared to invest. People are afraid, trepidation, losing their money and all that. There's safety in this if you know what you're doing.
Well, yes, like with last year, what happened? Last year, the markets were really down when we had the bear market. And, it kind of, yes, definitely scared people.
Risk. There's always risk.
But yes, there's always risk involved. Some people want high risk, which can produce high rewards. But other people want to be more conservative and are risk adverse. And there are options for that. Currently, we have a great offering with our LOM money market fund, and it's been really performing well this year. It performs very well in times when interest rates are high. Currently, the last 30 days performance has been, if it's annualized, has been 4.56%. So that's a really good return. I mean, we're outperforming all the banks and, all our competitors on island especially. So, we do have options that are low risk, cost effective, as well as the money market account is very liquid. It's only got a 2-day turnaround time if you want to pull your funds for something else,
that's pretty quick.
Or if you want to sit on the sidelines. So
wait it out.
Yeah, well, that's the thing. So now when you're a bit tentative in the market, this is the ideal fund to park your money in, make it still work for you. You're still beating inflation. And then when you're ready to pull the trigger on something else, you just put in the notice.
They call this a liquid investment?
Yes. Well, 2 days. I mean...
2 days. I mean, I'm amazed that you could do that. You talk about if like in and out. in and out.
Yeah, well, look, obviously you don't want to do investing with in and out the whole time. But as I say, we've got this option where you can just park your funds. If you're a little bit tentative, maybe you're unsure, maybe you want to just test it out first. I mean, it depends. That's where you come down to our offices, or I have a meeting with you. You sit down with me, we discuss a few things. Yeah, I explain it to you. I go through the everything that's going on, and if you're not feeling super comfortable, we go with a very conservative option. Or depending on where you are in your life stage, we also spoke about that previously. There might be a different asset allocation for a person who's at a different stage in their life or has different goals.
Education, you know what I mean, Sal? Anyway, I'm moving along here. So the return rates outperform the returns from local banks. You mentioned that. That's pretty a bold statement.
Well, look, it's if your money's just sitting in the bank, unfortunately, it's getting pretty much not much. I don't want to say nothing because that's not true, but it's extremely small. And if you put it on a notice with the banks or with some other financial institutions, they lock you in for a period of 2 or 3 years, then you can get a semi-decent interest rate, but we still beat that. So, and if you're not doing something with your money, essentially you're losing out because your money's losing value against inflation.
The bank is using your money to invest for them.
And that. So
they're making money off of your money.
Correct.
Real quick, I want to know a little bit about what's going on over at LOM, obviously. And you guys recently posted your dividend value portfolio. I want to know about that. Can you tell me about that?
Yeah, so some exciting news on that. We've actually decreased the minimum on that because of the opportunity that we see with the dividend value portfolio. So it's been decreased to the minimum is $250,000. And this is a discretionary managed fund, and that's different from what we spoke about last time with the mutual funds. The mutual funds is like a pooled investment of clients' funds, whereas a discretionary fund like the DVP, the dividend value portfolio, DVP for short.
Hey, you remember who you're talking to? Come on,
yes,
Jason.
yes. No, I want everybody to understand it fully. That is a discretionary managed fund that you will actually see when it reflects on your profile. You can actually see the different stocks that it's invested in, whereas you won't just see that it's a fund investment. Right. So this is quite exciting. And then just to explain a little bit about what the dividend value portfolio is. First of all, a value stock. To understand that, value stock is a stock in the market that's seen as currently undervalued against sort of the company performance and the fundamentals of a stock. So that we see it as an opportunity to buy that stock when it's undervalued. Get in while it's low. Yeah. And these are usually well-known companies, well-established. It doesn't mean that it's speculative investing. It's just companies that may be going through a bit of a dip. For example, there was a lot of banking stocks recently that took a bit of a dip, and they're all good companies and strong companies and performing very well in the market. It's just with what happened in the banking sector early in the year,
a couple banks closed.
Yeah, well, there was a bit of a scare, and people were not comfortable with holding those stocks, so they did pull back a bit. But it also, we got to understand that like the pullback in the market this month, that creates opportunity for investors who are looking to take advantage of that.
On your website, can they see what people are doing? I noticed that on my notes I have here Brian's seminar at Cayman last year. He's probably one of your big time investing.
Well, yes, he's our head asset manager.
Yeah,
so
can you see that on your
yes,
website?
we can. We show everything on our website, all our performance. Our funds are published, so that's also.
You could follow stuff.
Yes, it's available on the BSX. Our funds. And then, just to get back to the DVP to finish on it, the second point that the stocks we target on there are higher yielding dividend stocks, right? So with that DVP, while you are waiting to take advantage of those undervalued stocks that we've identified, you are earning dividends in the portfolio. So your portfolio grows, it covers any applicable or more than covers any applicable costs. and slowly grows, and then when you get that capital advantage, when the undervalued stock performs again, you benefit the most from that.
Right. You always hear the term, don't put all your eggs in one basket.
Correct.
I get you hear that one all the time. In this case,
well, we spoke about it previously. Yeah. Diversification is key. Yeah. You've got to make sure you have a diversified portfolio. And again, going back to when people are a bit tentative, as long as you have a good spread, you've got enough diversification, and you're willing to spend time in the market, it's going to work for you.
Now, you guys are located around the world in different places, right? Cayman?
Correct. We have offices in Cayman Islands. We have offices in the Bahamas. Our head office is here in Bermuda. We do have admin offices in the UK.
Right.
So, yes, we are global.
You're international.
Yes, we're international.
All right. I'm just wondering what's going on with inflation and how it's affecting the everyday person. You know, they may not have $250,000 to invest. You do start at what, 25?
25,000 is our minimum.
Yeah.
So I think we've got a good spread of offering, and that's just showing you with the money market would be a 25 minimum. But yes, with the DVP for the more maybe the bigger investor, that's a great option there. So we've got something for everything. Yeah, we've got something for everyone.
Yeah. So I when I hear 25, I'm thinking anyone young, student maybe, or somebody who's got a job, just come out of school, got a job, saving their money. Well, good to put 25 grand up and
definitely
start working.
There's no better time to start than now. So again, we are here to help to offer a personal and professional service to all types of people. We don't only obviously we're here to help people that want to make their money work. So that doesn't matter whether you're starting out or you're the seasoned investor.
All right. So I mentioned how inflation is going to affect the everyday person. I guess you can tell me a little bit about that. They just know that grocery costs are high, rent is high, certain everyday things that they have to deal with. It's on the increase.
So in layman's terms, inflation is the increase of cost of living. Mm-hmm. So from year to year, it will be measured. The good news is with the Fed doing their interest rate hikes, they have, or seemingly they've got inflation semi under control for now. That's not to say that they haven't reached their target, and that may take some time.
0.25%. They're just taking them up.
Well, remember their plan is to try and get inflation under control without breaking the market. Because remember, if they do too much too quickly, it could send something into a spiral, and that's when we get havoc in the market. So
then you get into a depression, and you don't want to go to no depression.
Exactly.
All right. How do folks get in touch with you, Jason? And also, just want to know, like, if they want an opportunity to sit down with you or one of your other investment counselors.
Well, yes, that's what we're here for. The simplest way is to reach out to us on our website. That's www.lom.com. There's a contact us function. Reach out to us, ask for Jason. Alternatively, you can call our main line. Our main line number is 292-5000. That's 292-5000. Also, our offices are located on the corner of Reed and Burnaby Street in Hamilton. So, reach out to us, give us a call, or on the website, ask for Jason. I will get in contact with you, give you a call. We'll arrange a meeting. We sit down, we discuss things, and see what I can do for you. Remember, our consultations are absolutely free. There's no obligations. So even if you want to just explore what's out there, that's what we're here for.
Time to think about it, isn't it?
Yes, well, we want to help where we can, and again, we always emphasize that we're here to build good financial relationships with our clients. There's no short-term goals. We're looking to build that relationship over time.
All right, it's all about wealth management. You know what I mean? We've got Saul here. What school do you go to, Saul?
I'm at the University of Southampton.
Oh, wow, yeah. In England.
Yeah, in the UK.
And what do you want to be?
I'm not sure.
Jason knows his stuff. Hang around, Jason. But you're an intern over at LOM right now.
Yeah.
All right, but hey, financial is the way to go in many cases. All right, guys, have a great day and weather the storm. I don't think it's going to be as severe as some places. We're into hurricane season though, so we're going to see more frequency. Climate, man. It's all about the climate.
Yes, thanks, Captain. Thanks for having us again. Good to see you. We'll see you soon.
All right. Take care, you guys.